I think the reason it's there is purely because of the geopolitical risk bid. I think, you take that away and oil would be a lot cheaper than it is. So then the question becomes, how much more geopolitical bid can it get? And I've got a lot of sympathy for the view that if you've got, Trump in Washington and Boris Johnson in London, well, what could possibly go right almost? So there are, reasons to speculate.
About the oil market. Well, good morning to you.
Good morning, Steve.
How are you?
I'm very good.
Is it really about the oil market, or is it about this other big trade we were talking about with our guests from Bank of America before, that actually people are desperately trying to get the dollar down and there's an inverse relationship with the commodities?
I don't think the people that are buying oil are necessarily the ones trying to get the dollar down. I don't think there's a lot of governmental action taking place in there. China obviously has got its own long-term structural reasons for wanting to undermine the petrodollar, but I don't think that's what this is all about. I think, this is, if you look at it, this is largely a reaction to, the geopolitical story, and trying to speculate on that as, good luck to it. But I think there's other ways of speculating on geopolitics that are much more robust than using oil.
Okay, let me just have one more go at this, and I'll drop this because then we've got an 8:30 chat about oil as well. But we did see WTI having its worst week since May, and Brent having its worst week of 2019 as well. So I hear what you're saying about some geopolitical premium on there, but it ain't that much.
Well, no, I think it is. I think that's the whole point. There's a lot of downward pressure on oil because the consumption story, the inventory story, structurally, that's actually looking pretty weak. So oil should be trading a lot lower than it is. And the only thing that's keeping it at the levels where it is the geopolitical bid. Take that away and it's a lot cheaper, like Jeff said.
I was highlighting the wall how many different themes investors have to try and trade this week. I mean, you've got central bank action all last week. It was about the Fed. What is the extent of the cut going to look like? And you can imagine that's only going to continue as you get closer to the event.
True.
ECB this week.
There is the sort of Fed blackout period now, so they should be a bit quieter for the next
Your investors,
few days.
I'm sure, will continue to speculate.
Yeah, of course they will, yeah.
You've got ECB, you've got politics everywhere from trade wars to in the UK, and then earnings season with the FANGs, which have been a fairly huge driver of stock market action. We get more of a glimpse into their numbers this week as well. So what do you think the tone's going to be? Risk off or a little bit more risk on?
I don't think there is a tone. I think the tone is going to be, event driven, to use a phrase. I think people are just going to react. I think that's why we're starting to see, very small scale, very localized, very short-term volatility creeping back into the market because there isn't any overarching theme anymore. So people are just reacting to whatever happens. And, the news inflows at the moment are completely off the scale. We've got all events happening all around the world. But I think, the point about earnings is really interesting because a lot of people are saying, talking about earnings in a kind of headline way. It's not about that. It's obviously, the reported results are important, but it's going to be about guidance. It's also going to be about the structure of the market, because if we start to see that FANGs are underperforming relative to the market, then that is a huge story in itself. So, this week I think is going to be about what support earnings gives the market. And again, I don't think it's going to be clear. I don't think it's going to be absolutely black and white. I think we're edging into a situation where we're starting to see more and more structural bad news come through on earnings. This is an earnings recession, which again doesn't get as much coverage as perhaps it should, but we are in an earnings recession, and already expectations are so low, and yet the beats that we've had reported so far are one of the lowest percentages of beats that we've had for a long period of time. So I think there's a slightly negative theme, if anything, to the markets, but that could change on 2 or 3 positive earnings reports. It's very difficult.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.